Joining us this morning, the analyst behind that call, Goldman Sachs Managing Director Eric Sheridan. Eric, good morning. Great to have you back.
Great to see you, Carl. Happy holidays.
Same to you. We've talked to you before about the size of your universe. You certainly have a lot of names to choose from. Just very simply, tell me about Uber, and is it actually at the very top of this list?
It is at the top of the list from a risk-reward standpoint among the coverage universe we have. And I think as we started to think about next year and what's going to work on the consumer internet space and broadening it out to some of the other names in interactive entertainment and enterprise computing that we cover, we're looking for elements where there's rising utility, management teams that are willing to protect profit margins irrespective of what happens to the macro environment, the ability for companies to possibly return increased levels of capital to shareholders, and importantly within that checklist, we think a rising margin structure, no matter what happens on the macro environment, was pretty key to us because we think that's where you're going to get some support on the valuation levels as you look out, especially to the first half of 23, but we believe that extends all the way through 23, but probably more importantly over the next 6 months.
That's interesting because Khosrowshahi has not been one of those CEOs that has been advocating or preaching the gospel of massive cost reduction, headcount reduction. How does that work? How do you get that margin upside without what some argue needs to be a culling of resources in the near term?
Well, I think the most interesting thing with Uber is Uber had its moment in time at the height of the pandemic in the first half of 2020, where demand collapsed on the mobility side, and a lot of the legacy costs, legacy capital investments that company made had to be rationalized then. That was sort of Dara's moment by fire, to be honest. And then again, in the middle part of this year, the messaging shifted. If you go back to the earnings call in May and pretty consistent execution to the upside on EBITDA since then, we think the company has done a very good job of rationalizing costs, narrowing investments, picking the spots in the globe they want to compete in, picking the product sets that they believe are the best position for them to drive returns to the long term. And if you think about the targets that Dara and the team laid out at their February Analyst Day, it's a pathway to $5 billion plus of adjusted EBITDA in 2024. That's a pretty healthy growth rate looking out over the next couple of years in terms of EBITDA when compared to the potential for revenue growth. And that's what excites us the most from a risk-reward standpoint.
Eric, good morning. It's Deirdre. You've got a price target of $45 on Uber. That is its IPO price that it's never sort of been able to reclaim, at least for a while. Do you ever see Uber getting above a $100 billion market cap? Will it ever sort of fulfill that disruption that VCs in the private markets once envisioned for the company? Or, you know, is the end point that it will muddle somewhere below that?
That's our 12-month price target. Our upside node, which would be them executing on all of their initiatives and going beyond just the next 12 months, is much higher than that. So that would point to a success rate against the benchmark you just put out there in terms of the market cap potential for the company. We do think we're at an interesting moment in time where the product set they're offering to consumers on the mobility and the delivery side and wrapping a subscription product like Uber One around it is leading to rising utility at the consumer level. And one of the things we found in the 20 years we've been looking at TMT more broadly would be that if you capture consumer utility, especially if it's tied to a subscription level, Amazon Prime is probably the best example of this, the rising incremental margins, the rising spend per customer tends to create a lot of platform value over time.